Welcome friends, you are watching Tax Dosti videos. We are in part 3 of the decision regarding section 7E tax on the income. Sindh court through the civil petition number 4614 2022 decided in favor of FBR, that is section 7E, taxed on deemed income holding of property as of 30th June 2022 is a valid tax on that property, is a valid law, and we are we are discussing the different paragraphs. So we are in paragraph 3. Here we will be seeing what the respondents, that is FBR, Ministry of Finance, and the government advocates have been telling to the court. On the other hand, paragraph 3 says, on the other hand, respondent counsels, which have been listed here, and their arguments and all the case laws they have presented in favor of this section 7E being a valid law, have contended that the concept of deemed income is not alien to income tax law, that other sections also exist where income is deemed and it is taxed, whereas it has been validated in a number of cases by superior courts that it is a tax on income and not on property. Deemed income is a tax on income and not on property. Hence, it is within the competence of federal legislature under entry 47 to the fourth schedule of the Constitution. That is a conscious policy decision of the Federation Government of Pakistan, and therefore per settled law, courts must show restraint while interfering in the legislative competence of the government. So the court has to show restraint as long as the federal government is keeping in par with entry 47 and is taxing income and not property. So that it is not a case of exercising any power under entry 50 of 4th schedule to the Constitution, in as much as it has not a tax on the very property in question. This point I also raised in my previous videos that you would have seen on Tax Dosti YouTube channel, that this is not a tax on property of income, it is a deemed income tax, and it comes under 47, entry 47, not entry 50 of the fourth schedule. But on deemed income from the said property, hence permissible that in terms of section 15 of the ordinance, tax from rental income is already in the field and is being paid by the taxpayer, that various other taxes are also levied on property under various provisions of the ordinance. The respondent advocates are saying that this tax is also similar to tax which is already being paid by taxpayer in the income tax ordinance, that is section 15 is income from property. So they are comparing this to income from property, that there is no discrimination within section 7E of the ordinance, as the exception which have been provided are in respect of different classes of person. So there is no discrimination, since different classes of people are being treated, are being taxed differently. If people of one class were being taxed differently, some of them would have been taxed and some are not taxed, then this would have been discrimination. These are all the arguments with case laws that have been put forward by the FBR and government lawyers. And class of person who are otherwise enjoying various exemption and exceptions under ordinance, that the levy itself is a tax, hence within the competence of federal legislature to introduce the same under article 70 of the Constitution by way of money. Since it's a tax, it has to be introduced, and it has been introduced by money bill as given in article 70 of the Constitution, that any hardship or inability to pay tax is not a ground to declare the same as ultravires. Just because a tax is causing hardship for the taxpayer is no simple reason for declaring it beyond the powers of the government. That there is no concept of retrospectivity in the levy, that there is no retrospective effect has been applied, that the levy is not in violation of any fundamental rights. Neither are any fundamental rights like Article 23 property right to own property have been violated as provided in Constitution, including Article 23 and Article 253 to the that no property is being acquired forcibly, whereas reasonable exception and exemptions have also been provided to the petitioner and taxpayer. The difference between petitioner, that these are the people who are right now named in this judgment, and taxpayer means for whom all this judgment or this benefit or this section now applies. So in Sindh, everyone has to, after this judgment, October 2022, everyone has to file their return and also pay tax under Section 7E, for which a separate tab has been given in the income tax return in the computation section of tax chargeable. Within Section 7E of ordinance, that it is neither confiscatory nor discriminatory, whereas the tax has been levied to fulfill various obligations and functions of the state which requires immediate taxation measures, that under the concept of deemed income there is no requirement of a particular transaction to generate income. Now this is important, that under the concept of deemed income, it is not necessary that the income which is being deemed actually exists. The purpose of creating a legal fiction like deemed income is to make something taxable even if it is not generating any real income. That is in case of reasonable classification within 7E of the ordinance. Hence cannot be declared ultra vires on this ground, and it is the prerogative of the legislator. It is the power of the to choose a class of persons. Now here the class of persons means every person who is holding mainly immovable property as of 30th June 2022, and he is a resident of Pakistan, that is he has spent 183 days in Pakistan during tax year 2020. Now this class of person is being taxed, but some people or a certain subgroup of people like federal employees, army employees who get property for the first time allotted as part of their salary package have been excluded from it, or any person who has paid tax on this during tax year 22, which means that he has bought immovable property during 2022, he has been excluded. So there is no other, that it is the power of the legislature to choose a class of person which they have done, property owners, on whom the tax may be imposed or not. So this is the power of the federal. This is what the federation advocates are saying, that tax on income is not by itself a tax on property, that income cannot be deemed without any transaction, that presumptive income or presumptive tax are provided in the ordinance, and in various sections it is not necessary that there must be an actual income for taxation purpose. Even if a file or plot does not generate income now or in the future, the tax law is considering that this person has enough money to buy so many plots, files, or area that cannot be that can in future be constructed and give him value, or he can sell these and capital gain can be generated on files even. So if the government is taxing the holding of files or plots by you, it is taxing it because it is at least it can generate capital gains when you sell it. And then again this is a valid point, that at least files, and but if you have something like maybe books or something other than it, if it's a rare book, it cannot generate income. So maybe taxing your books is not a good idea, but taxing your files and property. So these are the arguments that the court, Sindh High Court, heard, in which after which we will in coming videos see the conclusion and judgment of the judges of Sindh High Court. That the recharacterization of income is permissible under the ordinance, which means that we can reconsider that this plot, even if it does not give rental income, it can give capital gains, or it can be pledged with the bank to get loan. So the transaction can be recharacterized, that tax on such income has been leveled reasonably vis-a-vis value of property, that the various taxpayers have availed the benefit of foreign asset amnesty in 2018 and 2019. So the taxpayer had chance to protect their assets by taking amnesty. Hence, when benefit of such legislation on properties was availed, then subsequently the competence to level. If the government can give benefit in terms of immovable property and different capital assets, then it can also tax them. So this is the logic. The competence to levy tax on income on the same property cannot be challenged that the rental income of property is being taxed from the inception of Income Tax Act 1922, and such tax is covered by entry 47. So whatever law has been made already, the power and precedence, meaning in the previous tax laws, such things were given, and in the Indian tax law is also given that when you hold more than two houses, then your third and fourth house will be taxed at their fair market value, hence cannot be declared ultra vires. And so since all of these laws, the procedures, the precedence is available, so this law cannot be struck down, that it is not against the constitution. And by placing reliance on cases reported as, they have prayed for dismissal of this petition. So the respondents, FBR and government, says that all the petitioners, all the taxpayers that have come to us, we want to dismiss their case without giving them any remedy. Thank you very much. You are watching part 3. See you in part 4.